Hello students, welcome to Stressed of Us CA and CMA. Myself DB Subramaniam and I am dealing paper number 2 corporate and other laws at CA inter level. So paper 2 is of two parts ma. Part 1 corporate laws, part 2 other laws. So if you take other laws, it is having a weightage of 40 marks. Including choice, it may be around 48 to 50 marks. So this other laws we are having four topics. First one, Indian Contract Act. Next, Negotiable Instruments Act. And then General Clauses Act. Finally, Interpretation of Statutes and Deeds. So in this lecture, I am going to cover Indian Contract Act Special Contracts. As we all know, contract is nothing but a legally binding agreement between two or more parties, right? So we had two types of contracts, ma. General contract, special contracts. So principles related to general contracts you already read at CA foundation level. So here we are not having complete Indian Contract Act. Here the syllabus is restricted to only special contracts. So Indian Contract Act recognized 5 kinds of special contracts. So what are they, sir? What are they? So I'll write it down. So special contracts. First one, contract of indemnity. Next one, contract of guarantee. Next, contract of bailment. And fourth topic, contract of pledge. Final topic, contract of agency. So these 5 contracts are treated as special contracts. I'm going to take up the first topic, that is contract of indemnity. So tell me students, what is meant by indemnity? What do you know about indemnity? So you might have heard about these words indemnity, indemnify, right? So indemnity means to compensate the loss, correct? To compensate the loss or to make good the loss. To make good the loss. Fine. So these are the meanings of indemnity. But we need, what is a contract of indemnity? So indemnity means to compensate the loss or to make good the loss. Fine. But what is meant by contract of indemnity? First of all, let me tell you the definition of contract of indemnity, and then we'll have a discussion on a couple of examples. So contract. Tell me, my dear students, for a contract, how many parties are required? Two parties. For any contract, two parties are required because a person can't enter into contract with himself. So two parties are required. So contract of indemnity. So indemnity is a contract by which one party promises the other to save from loss caused by the conduct of promisor himself or by the conduct of any third party. Understood? Understood? I'll tell you one more time. Indemnity is a contract by which one party promises to save the other from loss caused by the conduct of promisor himself or by the conduct of a third party. You didn't get it? So let me have a pictorial presentation of definition and then we'll discuss few examples on this. So tell me, for a contract, how many parties are required? So two parties, sir. Party 1, party 2. So what party 1 is doing? He's making a promise to save other from loss. To save other from loss. Here other person is party number 2. So party 1 is making promise to save party 2 from loss. So which loss, sir? Which loss? Caused by the conduct of promisor himself. By the conduct of promisor himself or caused by the conduct of any third party. Any third party. So third party here means simply stranger. Third party is simply stranger because P1 and P2 are parties to the contract. Any person other than P1 and P2 is nothing but strangers to the contract. Are you getting my point? So let me quickly tell you the definition of the indemnity. So indemnity is a contract by which one party promises to save other from loss caused by the conduct of promisor himself or caused by the conduct of any third party. So this is nothing but indemnity contract. I'll tell you one small example. One day on road, I found one gold chain, ma. So one gold necklace, gold ornament. So who am I? Finder of lost goods. So I made an advertisement that yes, any person who claims ownership of the property, come to me and claim the property. So I found the gold ornament. I'm searching for a true owner. Mr. Arun came to me. Sir, that gold chain belongs to me, sir. Please give me that gold ornament. He told me. So I'm okay. Yes, Arun is the owner of the property. I'm ready to deliver the property. But think, think a situation. Suppose, I assumed that, or it was proved that Arun was the true owner. So I'm ready to return the ornament. Imagine that I returned ornament. But tomorrow, maybe some Varun might come into the picture, and he may once again ask me about the gold ornament. He may, sir, that property belongs to me, sir. That gold ornament belongs to me. I'm the true owner, sir. So these are the true documents. I purchased this gold ornament in so and so showroom, sir. So I'm the true owner. Come on, return the property to me. And matter went to the court. Imagine, just imagine, matter went to the court. So court gave a judgment that Varun is the true owner. But I already returned property to Arun. I already returned property to Arun. So court ordered me to return the property to Varun. I'm not having any gold chain. Now what court will decide? Court will ask me to pay compensation to Varun. That means it is a loss to me, right? Imagine my situation. There is a risk associated with the return of the gold ornament. Are you getting my point, students? So Arun came to me. So he is asking me, sir, I am the owner of the property. Come on, return the property. But I'm ready to return the property. There is some risk. Tomorrow, if someone proved to be the true owner, I'm liable to compensate that person. So there is a loss, or there is a risk associated in this arrangement. Now what I'll do, I'll ask Arun, it's okay, fine, but think about my position. If I return this ornament to you, and tomorrow if someone fraudulently proves that he if someone is the owner of the property, I need to return property to that person, or I need to pay money to that person, which is lost to me. So think about me. So come on, give me one bond. Give me one bond. Name, it is nothing but indemnity bond. Give me one bond. So what is the content of this indemnity bond? So in this indemnity bond, Arun will write a statement. Arun will make a statement like this. I, Mr. Arun, hereby declare that I'm the true owner of the gold ornament. So in future, if someone is proved to be the owner of the property, and if Mr. V is liable to pay any amount to that person, then I'm going to indemnify Mr. V. So what Arun is doing, he's making a promise to me. What promise? Sir, tomorrow if someone is proved to be true owner, as a consequence, if you are going to suffer any loss, I'm going to compensate your loss, sir. Like that, Arun is making a bond, and he's signing it, and he's giving this bond to me. And we call it as indemnity bond. Are you all getting my point, students? So who is Arun? Sir, he is a person who is making a promise. So promiser, party 1. And who is Mr. V? Sir, he is a promisee, and whose loss can be compensated in future. So party number 2. Party number 2. And here loss to Mr. V depends upon ownership of the property. If Arun is a true owner, then loss to Mr. V is 0. But if Arun is, imagine if Arun is not a owner, he created forged documents and he claimed property from me, then obviously tomorrow I'll be liable to true owner. That is the loss. Here loss was caused due to whose conduct, sir? Arun conduct, because Arun created fraud documents. Arun created forged documents. Yes or no? Are you all getting my point, students? So in this contract, simply what is an indemnity contract, sir? It is a contract by which one party promises to save other from loss caused by the conduct of promisor himself or by the conduct of any third party. And here party 1, P1, is treated as is called as indemnifier. indemnifier. Simply, promiser under indemnity is none other than indemnifier, and party 2 is treated as indemnity holder, or indemnified. For the purpose of my convenience, I'll call him as indemnity holder, and this arrangement is nothing but indemnity contract. Are you all getting my point, students? So what is a contract of indemnity? The contract of indemnity is a contract by which one party promises to save other from loss caused by the conduct of promiser himself or by the conduct of a third party. Sir, we need an example for by the conduct of third party, sir. Third party. Imagine a situation. Yes. Take an example of your parent. So one parent, he is having a son who is some 15 years old person. Now this son started playing cricket on the roads, ma. So he started playing cricket on the roads. Now neighbors came to parents, sir, your kid is playing cricket on the road. If he kick the ball, if that ball hits my window get damaged, sir. So stop him from playing cricket on the road, sir. Now these parents started giving indemnity bonds. Now what would be the content of the bond? So parent is telling, because of my son cricket, if your window gets damaged or if your belongings gets damaged, I'm going to compensate you. Now tell me, who is making promise? Parent. So who is the parent? Indemnifier, promiser. And whose loss is getting compensated? Neighbor. He is treated as indemnity holder. Now tell me, in this example, the neighbor may suffer loss because of whose conduct? Son. If this fellow kick the ball to the window and if the window gets damaged, then only neighbor will suffer loss. In that situation, only parent is liable to compensate neighbor loss. Yes or no? So if you take this example, definitely, so here loss was caused due to whose conduct, ma? Promiser conduct or third party conduct? Third party, because son is a third party, he is not a party to the contract. Parent and then neighbor. So who are the parties to the contract here? Parent, neighbor. And here neighbor may suffer loss because of some third person. So now tell me, my dear students, how many of your parents entered into such indemnity contracts? Obviously many of you, 99% of your 99% of the students' parents might have entered into such a indemnity contracts. So let me repeat one more time. What is meant by indemnity? Sir, indemnity is a contract by which one party promises to save other from loss caused by the conduct of promiser himself or caused by the conduct of third party. Understood? The person who promises to save other from loss is known as indemnifier, and whose loss is getting compensated, he is known as indemnity holder. Are you all getting my point? Let me take you one small example with respect to our day-to-day business activities. Myself, Mr. V, so DV Subramaniam, right? So I'll take V letter. I'm the seller, ma. I'm the seller. One day, I consigned goods to Mr. Gopi, my friend. So he is a buyer. So I use it to sell the goods, and Gopi, my customer and my friend. So I consigned goods to Mr. Gopi. So I'm in Hyderabad, ma, and my friend is from imagine Delhi. Example sake, I'm telling you. So what I did, I consigned some goods to my friend Mr. Gopi. So I delivered all the goods to railway company for the purpose of transportation. So I'm from Hyderabad. I'm sending goods to Gopi, who is a resident of Delhi. So I delivered goods to railway company. Railway company gave me one document called railway receipt, document of title. Do you all know that point? So invoices, document showing title, railway receipt, document of title. Whoever possesses this document, they can claim ownership of the property, right? Okay, fine. So through courier or through postal mode, I sent this railway receipt to Gopi, ma. But this Gopi, very negligent person, number one negligent person. What he did, he lost this railway receipt. So one day, railway company, Delhi branch called Gopi, sir, goods arrived, sir. So come to the station, collect your goods. Gopi went to the railway station, and he started telling, sir, I lost railway receipt, sir, but please give me the goods. Do you think railway company will return the goods? Obviously, yes, because simply loss of railway receipt, don't think that railway company will become owner of the goods. Railway company, they feel secure in returning the goods to the person whoever produced that railway receipt. They feel very secure. Understood. So simply loss of railway receipt, don't think that railway company becomes owner of the property. So now Gopi started requesting railway company, sir, I am the owner of the goods, you can open the records. See, yes, so these goods were consigned to Gopi. I am Mr. Gopi. See, this is my Aadhaar card, this is my PAN card, this is my voter ID. He started showing all the documents. Finally railway company got convinced, yes, Gopi is the owner. But do you know that railway company will straight away deliver goods to Gopi? No. Railway company will take one indemnity bond. Simply, in simple words, declaration, simple words. In a common layman perspective, this indemnity bond is nothing but a simple declaration. The railway company will collect a declaration from Gopi. So in the declaration, what Gopi will write, so Gopi will declare himself as owner of the property. And tomorrow, if any person, whoever produced the railway receipt, and because of this, if railway company is going to suffer any loss, I am going to indemnify railway company. Like that, he will write the content and he will sign it. And you all know that all the agreements are enforceable only if they are legally stamped. So all other formalities he will finish it up, and he will give this indemnity bond to railway company. Now my dear students, tell me, who is making promise to whom? Who is making promise to whom? Sir, Gopi is making promise to railway company, sir. Now who is Gopi, indemnifier. Indemnifier. Now tell me, who may suffer loss in future because of Gopi's conduct? Railway companies, sir. Then whose loss is going to get compensated because of this bond? Railway company. Now tell me, railway company comes into the position of indemnity holder. Are you all getting my point, students? So indemnity means it is a contract by which one party promises to save other from loss caused by the conduct of promisor himself or by the conduct of third party. But one more a strange question, one small doubt. Do you think all indemnity contracts, do you think all indemnity holders will enforce indemnity bond? My question, do you think all indemnity holders of indemnity contracts, do you think they enforce, all of them will enforce this agreement? The answer is absolutely no. Why? These indemnity contracts are enforceable only when there is loss to indemnity holder. Suppose 10 years completed, 20 years completed, no person approached railway company claiming the goods. No person approached railway company producing the railway receipt, with respect to these goods. Now tell me, loss to railway company, how much? How much is the loss to the railway company? Zero. If loss to the railway company is zero, then do you think railway company will enforce the railway receipt, No, sir. Then what is the liability of Gopi? How much, for how much amount Gopi is liable? So for zero amount, sir. That means indemnity contracts are enforceable only when there is loss to the indemnity holders. So simply I can conclude that all indemnity contracts are contingent contracts. The enforceability of this contract depends upon the loss to indemnity holder. Everyone getting my point, students? Everyone? Okay, fine. So tell me, who are the parties to the indemnity contract, Indemnifier. Next one, indemnity holder. So indemnifier is making promise He's making promise to indemnity holder, right? So now tell me, what are the circumstances or what are the situations where indemnifier will be liable to indemnity holder? Sir, already you told, sir. What is the answer, ma? What is the answer? So when loss to indemnity holder becomes certain or it becomes absolute, then from that point onwards, indemnifier liability gets commenced. So tomorrow, if you see the question in exam, so when the indemnifier liability gets commenced, so when the liability of indemnifier gets commenced, the answer is whenever there is a loss to the indemnity holder, or loss to indemnity holder, if it becomes certain or absolute, then the indemnifier liability becomes absolute. Understood? But first of all, tell me, do you think this indemnity contract should satisfy all the essentials of a valid contract? Do you think the indemnity contract need to satisfy all the essentials of a valid contract? The answer is yes. First of all, tell me, what are the essentials of a valid contract? Offer, acceptance, consideration, capacity of parties to the contract, legality of the object, simply lawful object, lawful consideration, performance of the contract should be certain, the terms used in the contract should be certain, and the agreement should not be expressly declared as void, and then certainty of performance I already told. Next, other conditions, other essential features like stamping, writing, etc. Yes or no? Now indemnity contract, it is a one type of contract, it should also satisfy all these conditions, then only it is enforceable, or else indemnity contract is not enforceable. Everyone getting my point? So like general contracts, indemnity contract should also satisfy all other essentials. So we need an example, sir. Yeah, I'll tell you, ma. Suppose, ma, I'm very angry with Mr. Raju, ma. So Raju is not listening to me. Always Raju is fighting with me. That's why one day I went to Mr. Krishna. Just listen to the example. So I went to Krishna and I told Krishna, go and beat Mr. Raju. You just give a strong punches to Raju. Krishna told me, sir, if I kick Raju, he may file complaint on me, sir. I'm liable to pay some amount to Raju, and I'm liable to pay some amount to clear all these lawful, simply, to come out of this case, sir. I can't beat Mr. Raju because I was scared about the punishment, sir. Immediately I told Krishna, don't worry. Because of your beating, because you are simply beating Raju, whatever loss tomorrow you may suffer, whatever loss. Suppose tomorrow if you suffer a loss of 5 lakhs because of beating Mr. Raju, I'll compensate you. I'll indemnify you. So just go and beat Mr. Raju. Now Krishna went and he beat Raju. Yes, Raju was admitted in hospital. So Raju family people and police, Raju family people, family members went to police station, filed case. So Krishna, in order to come out of that case, he paid 5 lakhs to Raju family. The very next minute, Krishna came to me. Now tell me, my dear students, am I liable to indemnify Mr. Krishna? Answer my question. Am I liable to indemnify Krishna? The answer is no. Why no, sir? The object of agreement is unlawful. Beating a person, disturbing some other freedom is not a lawful activity. Yes or no? We are having fundamental rights. We are having fundamental duties. We can do anything except few things. You can't beat some other person unless you are a police officer. You can't kill a person. You can't disturb other people's privacy. Yes or no? So here the agreement between Mr. V and Krishna is simply, it's unlawful agreement. It is not enforceable. My dear students, tell me, is this indemnity contract enforceable or not enforceable? Answer is not enforceable. Everyone getting my answer, students? Fine. So like general contract, indemnity contract should also possess all the essential features. Yes or no? Okay, fine. Now my dear students, generally contracts are of two types. Contracts are of how many types? Two types. express contracts, implied contracts. So what is meant by express contract? The express contract means, through words spoken or written. If contract was created, we call it as express contract. Correct? Correct. Then what is an implied contract? So by the conduct of parties, if any contract was created, we call it as implied contract, sir. Sometimes it might be through operation of law. Sometimes it might be through conduct of the parties. 100% correct. So implied means simply, other than words spoken or written. Express means through words spoken or written. If contract is created, we call it as express contract. Okay, ma'am. Correct. Similarly, indemnity is also of two types. Indemnity, you can classify indemnity also two types, express indemnity contract, implied indemnity contract. Okay, so express indemnity contract, whatever examples I discussed so far, loss of railway receipt, finder of lost goods, are you all getting my point? So all these are examples of express contract of indemnity, express indemnity contracts. Then sir, we need an example for implied indemnity contract. I'll tell you, but you'll get complete clarity about this point once I start guarantee contract. But for the time being, I'll give you one small example. Example for implied indemnity contract. Listen carefully, ma. One day, Mr. Gopi appointed Mr. Arun as his auctioneer. Auctioneer, about auction. Auction where valuable items, very old items will be placed in front of public, and auctioneer will start auction. So those who bid at highest price, for them that article will be sold. Yes or no? So Gopi appointed Arun as his auctioneer for the purpose of selling some valuable items. For this, Gopi agreed to pay some commission to Arun. Okay, fine. There is a contract for selling some items. Clear? Now Arun conducted auction, and in auction he sold items to public, ma. He sold some items to public. Finally, purpose is completed. But after a day, what happened? Mr. Ravi came into picture and he sued Arun. Why, sir? Why? Because Ravi is the true owner of these items. Ravi is the true owner of the items. Gopi has no ownership. Fraud person. He had no ownership. Fraud person. So he made Arun to think that Gopi is the owner of the goods, and he authorized Arun to sell the goods. Are you all getting my point? So simply Arun was cheated. Arun was cheated. So Ravi can't claim goods from the public because public already left. So Ravi will claim that loss from only Arun. Yes or no? Now Arun is liable to pay amount to Ravi. Obviously, court will order Arun will pay money to Ravi. So whatever amount Arun is paying, it is nothing but loss to Arun. Do you think after making payment, Arun will sit in a corner and cry? No. Arun will try to recover that loss. From whom? From Gopi. Actually, there is a contract of sale. There is an agreement for sale. Gopi authorized Arun to sell the items. There is no express indemnity contract. But here, if you observe by the conduct of parties, Arun, in good faith, believing that Gopi is the owner of the properties, and Arun sold all the items to the public. But finally, Ravi was proved to be the true owner. Arun has to pay amount to the Ravi. So whatever loss Arun is suffering, now tell me, my dear students, who should compensate? Gopi should compensate. That means Gopi stands in the position of indemnifier. Arun stands in the position of indemnity holder. You all getting my point, students? Yes, there is no express indemnity contract between Gopi and auctioneer. But by the conduct of the parties, by the conduct of business, there arises implied contract of indemnity. You'll get a perfect example under guarantee arrangement. For the time being, contract with auctioneer, it comes under implied contract of indemnity. Everyone. So with this, indemnity basics completed, and we are left with only one topic in indemnity, that is rights of indemnity holder. Rights of indemnity holder. My dear students, tell me, in a contract, how many parties will be there? Sir, obviously two parties, sir. There is no other answer. Minimum, no alternative, minimum two parties are there. So in indemnity contract, tell me how many parties are there? Two parties, indemnifier, indemnity holder. So you all know the moment one enter into the contract, he will have duties toward that contract. So indemnifier is making a promise to indemnity holder that whenever indemnity holders suffer loss, indemnifier will come into the picture. Indemnifier will compensate the loss of the indemnity holder. Yes or no? Yes or no? Yes, sir. So the moment one person entering into the contract, he will get duties. He will get duties, not rights. So when he will get rights, when he will get rights means when the other party makes a default, then the first party will get right. Initially, for example, take a normal example, a contract with Shrestha, student Shrestha. So there is a contract between student and Shrestha. Under this contract, student is having an obligation to pay fees. Shrestha Institute is having an obligation to render educational services, to provide classes on timely basis. So both the parties are having obligations. Imagine if institute is not providing classes on timely basis. Now it becomes right to the student. Student can demand the classes. Student can sue the institute. Are you all getting my point, students? So initially, the moment when we enter into the contract, parties to the contract will get duties. Breach of one duty gives right to another person. Imagine if you fail to pay the fees, institute is having complete right to stop you from listening to the classes. Now tell me, when you are getting right to sue institute, when institute makes default, when institute is getting right to sue you when you breaches your duty. So similarly here also, indemnifier, indemnity holder, initially they will have duties. But the point, once the triggering point happened, so in the contract of indemnity, what is the triggering point? Loss. Once indemnity holder incurs loss, then indemnifier has to compensate indemnity holder. So here, rights to the indemnity holder, it's nothing but duties of the indemnifier. Are you all getting my point, students? So rights of the indemnity holder is nothing but duties of indemnifier, but we are having a discussion. We need to discuss rights of the indemnity holder. So continuing my first example. Now which example? Gold ornament. Do you remember that gold ornament? So Mr. V, I'm the finder of lost goods. And who is the owner, ma? Forgot it. Who is the owner of the property? Arun. So Arun gave me one bond. So Arun claims that he is the owner of the property. And he executed indemnity bond in favor of me. He executed an indemnity bond. I returned ornament to Arun. I returned that gold ornament to Arun. But immediately after a week, what happened? Mr. Varun came into the picture and he showed me. That ornament belongs to me. Why you return that ornament to Mr. Arun? Come on, that ornament value is almost 5 lakhs. Pay that amount. Immediately, what I'll do? I'll contact Arun. Arun sir, so Varun approached me. He is telling that he is the owner of the property and he is asking me to pay 5 lakhs, sir. What I should do? Now, sir? Arun said, don't worry. So in this example, tell me who is the indemnifier, ma? Arun is the indemnifier. Who is the indemnity holder? V is the indemnity holder. So Arun told, don't worry, I'm the owner of the property. We ask one more time, just file a case on him. We irritate you, file a case on him. Okay. So there is a dispute between me and Mr. Varun. So matter went to the court, ma. But court was convinced that Mr. Varun is the owner of the property. Court got convinced because of evidences. For court, evidence is important, and that evidence is lying with Mr. Varun. So court ordered me. Yes, come on, pay 5 lakhs to Mr. Varun. This is nothing but damages. Pay 5 lakh rupee damages to Mr. Varun. Court ordered me. Now I am suffering with loss of how much rupees? 5 lakh rupee. Tell me, who should compensate my loss of 5 lakh rupee? Obviously, the answer is Arun. That means Arun should compensate my damages. Sorry, Arun should compensate my loss. Here the loss was because of court order. Court ordered me to pay 5 lakhs to Mr. Varun. So whatever damages ordered by court, I should pay, and it is lost to me. Lost to me. Who should indemnify? Indemnifier should indemnify me. Not only damages, my dear students. Just for going to the court. Tell me, do you think I argue in court? Do you think straight away? So my lord. So do you think I will argue directly? No. I'll appoint one advocate. I'll appoint one lawyer. So definitely lawyer will argue on behalf of me, but he will charge some fees. Yes or no? Professional fees. So which is nothing but cost of filing suit. Cost of filing suit. I paid some 10,000 rupees to my lawyer. So total how much loss I suffered, ma? 5 lakh rupees. Court ordered me to pay 5 lakhs to Varun, 5 lakh rupees. And 10,000 I paid to my lawyer. So total loss how much? 5 lakh 10,000. So Arun should compensate me. Tell me, option A 5 lakh rupees, option B 10,000 rupees, option C 5 lakh 10,000 rupees. How much amount Arun should compensate me? Answer is 5 lakh 10,000. That means not only damages but also cost. Okay, are you getting my point? So damages, cost of filing suits. Sometimes, ma, Varun, this will happen. Just think about this point. Sometimes, we both, I and Mr. Varun, will come together and we'll discuss. So today, if we go to the court, definitely judgment will come after many years. So these many years traveling to court, paying fees to lawyer, so lot of money gets wasted, lot of time gets wasted. So we'll enter into a compromise. So we'll go to an arbitrator who will they will also follow the principles of natural justice. Arbitrage and arbitrator, they will follow natural principles of justice only. Principles of natural justice. But the point is, they will settle the cases in a speedy manner. Okay, so we both entered into the compromise agreement. Yes, obviously, whatever indemnity holder is doing, he should follow according to the indemnifier instructions only. So listen, carefully keep this point in your mind. Whatever indemnity holder is doing, whatever steps indemnity holder is taking, he should take according to the instructions of indemnifier only. So according to the permission I got from Arun only, we both entered into the compromise arrangement. Under that compromise arrangement, arbitrator ordered me to pay some 3 lakhs to Varun. 3 lakh rupees to Varun. Imagine. Whatever amount I'm paying to Varun, it is lost to me. And who should compensate my loss? Obviously, indemnifier. Obviously, indemnifier. You're getting my point, students? Okay, fine. I'll give you one more example so that you'll get a clarity. That is a manufacturer. Listen, interesting example. Manufacturer, retailer, customer. So suppose, manufacturer, Dell manufacturer. So he's manufacturing Dell laptops. Retailer, Dell distributor. Simply, who comes under the retailer job? Distributor. So Dell dealer. So dealers, you can find dealer outlets everywhere. Yes or no? So customer, simply, one of the customer. Take example of Mr. Anand. One day Anand visited, Dell showroom. So he made he described the requirements, his requirements, and he told finally he need one laptop. Retailer sold the laptop, so just retailer sold the laptop. Sale of laptop happened. So Anand, while using that laptop, what happened? Suddenly that laptop, because of a short circuit or anything, that laptop got blasted. So laptop got blasted and Anand was severely injured. Now the cost of the laptop is some 60,000 and medical bills of Anand some 40,000 rupees. Total how much? 1 lakh rupee. Anand was not negligent, ma. He was using that laptop in a proper manner only. Anand is using laptop in a proper manner just in a week only. A week after purchase, that laptop got blasted. There is some manufacturing defect is there. Understood? So what Anand did, he went to the dealer and he claimed 1 lakh rupee loss from the dealer. Manufacturer, he will be somewhere at Delhi or or somewhere in Bangalore, etc. So customer can't directly go to the manufacturer premises. So obviously, customer will demand money from whom, sir? Retailer only. Now, retailer has to pay this 1 lakh rupee fine. But this defect is because of whose fault? Manufacturer fault. There is a manufacturing defect. The manufacturer should be he should take many steps in coming to a conclusion that he should test the product multiple times before releasing that item to the customer. Yes or no? Because dealer is not making manufacturing activity. Dealer is simply taking the items from manufacturer and selling it to the dealers, customers. So obviously here, if you observe, there is an arrangement between manufacturer and the retailer. That arrangement is nothing but indemnity. So whatever compensation retailer is giving, do you think retailer will pay out of his pocket? No, retailer will get it from manufacturer. So warranty sales, do you forget about warranty sales? So during warranty period, if any damage happened, definitely who will replace that item? Retailer only. And do you think retailer will incur that loss? No, retailer will forward that item to manufacturer. Manufacturer will replace it. So here Anand claimed 1 lakh rupees compensation. Retailer said 1 lakh is too much. I'll pay you some 70,000 because the cost of laptop is 60 and we'll pay you extra 10,000, 70,000. Anand was not convinced. So obviously, when there is a dispute between parties, definitely the parties will go to whom? The parties will approach court. So parties went to court. So court ordered retailer to pay 1 lakh rupee. And retailer incurred some 10,000 rupees, court charges for defending this case, or for appointing, for having a lawyer, good lawyer. So he incurred 10,000 rupees loss, or 10,000 rupees cost. Tell me how much amount the retailer indemnity holder can recover from manufacturer indemnifier. Come on, tell me the answer. 1,10,000 rupees, sir. This is possible only when matter goes to court. Imagine, retailer and Anand entered into a compromise agreement. Anand demanded 1 lakh, retailer requested for 80,000. So under compromise, retailer agreed to pay 90,000 to Anand. Now, whatever 90,000, amount paid by retailer, whatever the amount was paid by the retailer, it is a loss to whom? Sir, it is a loss to the retailer. Now, loss to the indemnity holder, who should compensate? Indemnifier, nothing but manufacturer. This is our day-to-day example, my dear students. Clear? So finally, tell me, what are the rights available to the indemnity holder? The rights available to indemnity holder. First right, recover damages paid under court order. Second right, recover cost of filing suit. Recover any sums paid under compromise arrangement. So these are the rights available to the indemnity holder. My dear students, this is not a complete list of rights of indemnity holder. This is simply special rights. Apart from these rights, he will have additional rights also. But these are the special rights given to the indemnity holder. So whenever loss to indemnity holder becomes absolute, indemnity holder can recover that loss from indemnifier. So let's see the material. We'll have a discussion point wise. Any additional point, I'll explain you. So the term indemnity literally means security against loss, or to make good the loss, or to compensate the party who suffered from the loss, some loss. So triggering point, once again I'm telling you, loss. The term contract of indemnity is defined under section 124 of the Indian Contract Act 1872. Okay, if you remember, quote this section. If you are not able to remember the section numbers, no problem, ignore them. There will be no advantage of quoting section numbers. Of course, if you quote correct section numbers, there will be some value addition. You'll get best marks. But simply not quoting section numbers, there would be no reduction of your marks. It is a contract. Indemnity is a contract by which one party promises to save other from loss caused to him by the conduct of promiser himself or by the conduct of any other person. Other person means, simply other than promiser and promisee. So analysis. Indemnity means to compensate or to make good the loss. Thus, under a contract of indemnity, the existence of loss is essential. Triggering point, main point, existence of loss. Unless the promisee has suffered a loss, he cannot hold the promiser liable on the contract of indemnity. So after reading this analysis, I got one more doubt. My doubt is, do you think insurance contracts are indemnity contracts? Come on, answer my question. Are indemnity contracts an insurance, or is an indemnity contract insurance contract? Come on, answer me. Sir, all indemnity contracts or all insurance contracts are indemnity contracts, sir. Right away, your answer is wrong. Insurance contracts are not indemnity contracts. Why? I'll tell you. I'll tell you one example. Last year, I bought a car, MG Hector. Some 26 lakhs I paid. So me, my family members went to a trip. We went to a beach. We parked the car somewhere on the beach. Suddenly, one tsunami came. No, waves came. Tsunami happened. And it washed away my car. There is no car. I lost my car. 26 lakhs rupees lost to me. What I'll do? Sir, sir, definitely you will file an application with insurance company for claiming the loss. Yes, fine. Insurance company, they gave me 20 lakhs. They gave me 20 lakhs. So here my loss was compensated. But tell me, I suffered loss because of whose conduct? I suffered loss, that tsunami washed away my car. I suffered loss of some 20 lakhs. The insurance company compensated me. Fine, everything is good. But because of whose conduct I incurred loss? Tsunami, natural calamity. But if you read the definition of indemnity, loss caused to him by the conduct of promiser himself or by the conduct of any other person. There is no word called act of God. There is no word called natural calamities. Then how can you tell that insurance contract is an indemnity contract? You all getting my point, students? Okay, fine. One more example. I bought stock. I purchased a stock, vegetable, grocery items, onions. I kept some 2 tons of onions in go down. I took insurance on this stock, closing stock. One day, due to heavy rains, short circuit happened. All my stock got burnt. Only ash is available. Now, insurance company came to me. It paid me some 2 crores amount. Whatever stock I lost, the value of the stock is 2 crores. Insurance company paid me 2 crores. My loss was compensated. Insurance company, promiser, me promising, my loss was compensated. But my question is, because of whose conduct I suffered loss? Short circuit. Is it a man-made disaster? No. Act of God, short circuit fire insurance. So, you strictly interpret the definition of indemnity under Indian Contract Act, insurance contracts are not treated as indemnity contracts. But this was challenged in one of the case study. Bombay High Court, it challenged the definition given in the Contract Act. It simply told that the definition of indemnity under Indian Contract Act is incomplete. It is covering only losses caused by the conduct of promiser, losses caused by the conduct of third party, but not act of God, but not some natural calamities. These were not covered. So they took interpretation from English law. See, challenging means they didn't told that this is invalid definition. This is invalid. They didn't declare that this is invalid definition. They told that, Bombay High Court told that this is incomplete definition. Something we need to add, or else it is not meaningful. So because of that Bombay High Court judgment, yes, insurance contracts are also treated as indemnity contracts. Sir, confusion, sir. I'll tell you. So generally, as per our Indian Contract Act 1872, insurance contracts are not treated as indemnity contracts. But because of Bombay High Court judgment, insurance contracts are also treated as indemnity contracts. So how they came to this conclusion, sir? They simply declared that the definition of indemnity under Indian Contract Act is silent, or it's not complete with respect to natural calamities. You're getting my point, students? So they took interpretation from English law, where indemnity under English law covers not only losses of promisor conduct, third party conduct, but also act of God was also covered. So accordingly, they gave judgment. So hence the indemnity contract, the below are not covered. One is loss occasioned by the conduct of promisee, or accident, or an act of God, natural event. So suppose, mom, in my second example, parent, son, neighbor. Did you remember parent, son, neighbor? So parent gave an indemnity bond to neighbors. So if my son kick ball to your window, and if your window gets damaged, I'm going to compensate you. Did you remember that example? So that neighbor is watching a son cricket, ma. Neighbor is watching. That son is not kicking ball to the window. That's why he took a stone and he thrown that stone at his home. That means he damaged his property. Who damaged property? Neighbor himself damaged his window. So in this case, tell me, do you think parent is liable to neighbor? Do you think parent is liable to neighbor? No. Why? That damage was caused by the conduct of promisee. The damage, that loss was caused because of, whose conduct? Promisee conduct. So because of promisee conduct, promisor is not liable to promisee. So losses happened by the conduct of promisee, or any accident or act of God, or any natural events were not covered under Indian Contract Act indemnity definition. Hope everyone had clarity on this point. I'm once again telling, this analysis is confined only to the Indian Contract Act, not to the English contract law. Fine. And we had few examples of indemnity, ma'am. Let me discuss these examples. Mr. X contracts with government to return to India after completing his studies at University of Cambridge and serve the government for a period of 5 years. If Mr. X fails to return to India, he will have to reimburse government. It is a contract of indemnity, correct? So now you can nowadays, many of these students leaving India, they are going to USA, Australia, Canada, London for their higher studies, master's studies. Actually, as per our rules, Indian Constitution rules, we can send our children for the purpose of studies, but then they should come to India and they should work in India. Then only Indian government, yes, GDP will be increased because of this person only, no, right? So this person, if he earn income in India, we can levy tax on his income, and whatever income he earned, definitely he will spend on the items, goods. So definitely India will get GST on the expenses also. So if everyone start leaving the country, definitely Indian revenue will come down. Only for the purposes of studies only. For the purpose of job, one should get H1B visa. Ma. I'm not confident about that word, but you are already aware of it. So for getting for leaving India permanently for the purpose of job, you should get a clearance. Without clearance, you are not eligible to go to other country. You are not entitled to work in the other country. So visa problems, visa procedure, that is entirely different. It is not in our portion. Okay, fine. But the point is, many of the students are leaving India for the purpose of their masters. Like, there is a condition, they should, after completion of their studies, they should come to India and they should work in India only. A week back, also 1 week back, I prepared one indemnity bond on behalf of my client son. So in that indemnity bond, the matter was clearly written. So after completion of my studies, I will come back to the India and I look after my parents. Like that indemnity bond was executed. Is it clear? So this is the flow, ma. This is the flow which we need to follow. Fine. So considering this example, is it an indemnity contract, sir? Yes, this is an indemnity contract. So who are the parties to the indemnity contract? X, government. And who is the promisor? X. So indemnifier. Who is indemnifier? X. And government stands in the position of indemnity holder. Tell me when government will enforce this indemnity bond? When X fails to return to India. If X fails to return to India, then government will enforce that bond. Government will recover some amount from the X. Next example. A may contract to indemnify B against the consequences of any proceedings which C may take against B in respect of a sum of rupees 5,000 advanced by C to B. In consequence, when B, who is called upon to pay the sum of money to C, fails to do so, then C would be able to recover the amount from A as provided in section 124. Just mark it. I'll tell you after completion of next question. You'll get to know about this example after completion of next question. So just keep it as pending. Example 3. X, a shareholder of the company, lost his share certificate. He applied for the duplicate. The company agreed to issue the same on the term that X will compensate the company against the loss where any holder produces the original certificate. Here there is a contract of indemnity between X and company. Similar to our railway receipt example, ma. Actually, X is the original owner of the company, original shareholder of the company. So there is a contract between X and company. This X lost the share certificate and X approached company. Sir, just open your register of members, sir. Just open your members register. There's so and so serial number. You will find my details. I'm the owner of this share, sir. So I lost share certificate. Please give me duplicate. But generally what happens, there is a probability that, probability. Just I'm telling you, chance. X might have sold these shares to Y. He might have executed shared transfer deed, and he might have delivered original share certificates to Y. And X might have told to Y, go to company after a week. For the time being, company key managerial staff are not available. They are in a business trip. So go to company after a week. Y said okay. But during this week only, within the week only, X approached company and X is asking for duplicate share certificate. Suppose company in good faith, if it issue duplicate share certificate in the name of X, what happens? What will happen? Tell me. 1 week later, what will happen? Y will approach company. Sir, I am the owner of the shares. I need share certificate. The company already issued share certificate in the name of X. Once again, company need to issue share certificate in the name of Y. There is a loss to the company, right? Because shares availability, there is a restriction on the number of shares. Authorized share capital, for example, 1 lakh shares. Paid up share capital also consists of 1 lakh shares. Already shares completed. You already issued shares, sir. There is no share lying with company. Tell me what company have to do. Company has to compensate Y, sir. There is a loss to company, Yes. So this will happen. In past, if you observe, in past, like these situations happen in multiple times. That's the only reason for keeping themselves in a safety position. Safe position. What company will do, company will ask an indemnity bond from X. Sir, X will give you duplicate share certificate, but give me indemnity bond. So tomorrow, if someone approaches us, if someone claims to be the true owner of the property, we will enforce that indemnity bond. We will claim money from you and we'll pay the money to them so that my risk will be zero. My loss would be zero. Now, are you getting the exact theme of the indemnity contract, ma? Is it clear? So, based on the past experience only, these contracts became popular. Now, tell me who is the indemnifier? X is the indemnifier. Who is the indemnity holder? Company is the indemnity holder. Next, fourth example. X may agree to indemnify Y. That means, X promiser, Y promisee for any loss or damage that may occur if a tree on Y's neighboring property blows over. If the tree then blows over and damages Y fence, X will be liable for the cost of fixing the fence. Yes, because X daily, he is growing the tree. He's growing the tree. Because of X conduct, if the tree grows up, and if it damages Y's fence, then X is liable to compensate Mr. Y. So who is indemnifier? X is indemnifier. Who is indemnity holder? Y is indemnity holder. And here loss would be caused due to whose conduct? X conduct only, not tree conduct. Tree is not a person. If you plant a tree in a proper manner, it will grow in that manner only. If you plant a tree in an improper manner, if you bend the tree, if you bend the plant slightly towards left or right, it will grow in that direction only. Understood? Then what are the parties to the indemnity contract? So we had two parties. One is indemnifier, the party who promises to indemnify or save the other party from loss. Indemnified or indemnity holder, the party who is promised to be saved against the loss. Next, question number 4. What are the different modes of contract of indemnity? Just now I told you we had two modes of indemnity contracts. One is express mode, the other one is implied mode. It is said to be express when a person expressly promises to compensate the other from the loss. And it is said to be implied when it is inferred from the conduct of the parties or from the circumstances of the case. So, example, auction sale. In an auction sale, there is an implied indemnity contract between the owner and auctioneer, or between the person who is giving authority and the auctioneer. Next one, state the essentials of a valid contract. You all know section 10 essentials: offer, acceptance, intention to create legal obligation, consideration, competency to contract, free consent, lawful object. It must be not be expressly declared to be void. Terms must not be vague or uncertain. Agreement must be capable of performance, and all other legal formalities. Next, give any example which explains about the unlawful agreement. I told you example, beating someone, killing someone. So giving some money to kill a person, or entering into an agreement. So you kill the person. Tomorrow any legal consequences I will face. I'll compensate you. All these are null and void. Okay. Is it clear? Next, a contract of fire insurance or marine insurance is always a contract of indemnity. And I told you, right? Natural calamities or something else, they are also treated as indemnity contracts only because of Bombay High Court judgment. Next one, no contract of indemnity exists in case of contract of life insurance. Yes, no life insurance contract. So life insurance means a person will take insurance on himself. A person will enter into a contract with LIC, life insurance insurance company. So insurance company will pay the money at the end of the tenure or in between, in middle only, if that person got deceased. Yes or no? Suppose X is there, X family is there. X took insurance policy from one insurance company. So what is the arrangement, ma? If X die, then insurance company will pay money to the family. Why? The family lost a person. X is the income earner. So definitely, if loss of X, definitely this family would be in financially risk. But my point is, my dear students, theme of indemnity is to compensate. What is the theme of indemnity? Compensate. Here X died. Tell me, can anyone compensate the life of a person? Is there any instrument on the earth to compensate the life of a person? Sir, insurance company is paying 1 crore rupees, no sir. Policy amount 1 crore they are paying, no sir. Yes, but because of that 1 crore, tell me the loss of X life, will it come into the picture? Can you bring back X? You're getting my point? No sir, not possible. That's it. So life will never ever be compensated. Financial difficulties can be, yes, you can overcome because of insurance money. We can overcome the financial difficulties. The point is, life of a person will never ever be compensated. So that's why life insurance contract will never comes under the indemnity contract. General insurance contracts comes under the definition of indemnity contracts. Next, rights of indemnity holder. I told you, he can recover damages, he can recover costs, or he can recover any other payments made under the compromise. Just see the point. An indemnity holder is entitled to recover the amount of damage which he has been compelled to pay to the another party in a suit to which contract of indemnity is applicable. Yes, whatever court order for damages, whatever amount insurance this person paid, which person? Indemnity holder paid, that amount he can recover from indemnifier. Next one, an indemnity holder is also entitled to claim all costs which he has incurred for defending himself in a suit to which the promise of indemnity is applicable. And then, so these two rights will get, indemnity holder will get if matter went to court. If matter went to court, then these two rights are available. Or else, in a contract of indemnity, if indemnity holder has made any payment to another party on the compromise of that suit to which contract of indemnity is applicable, he is entitled to recover such payment from the indemnifier, provided indemnity holder has acted as a person of reasonable prudence and has to comply with the order of indemnifier. Such compromise has been allowed by the indemnifier. That means indemnity holder should act according to the instructions of indemnifier. If there is no instruction from indemnifier, then he should act as a man of ordinary prudent. Understood? So simply, he should do the things according to the indemnifier directions. Then only he is entitled to recover any sums paid under compromise or any amount paid as a damage or cost. Next one, when does the liability of indemnifier commence? With an illustration. With this illustration, you can get to know that example also. Just now I left one example, right? You'll understand that example once I complete this question. The Indian Contract Act 1872 is silent on the time of commencement of liability of the indemnifier. Yes. So I told you, so when the indemnifier liability gets commenced, I think 30 minutes back I told you. The triggering point loss, it is correct. But when his liability gets started, once a loss to the indemnifier becomes absolute, right? So see the second point. However, the liability of indemnifier commences as soon as liability of indemnity holder becomes absolute and certain. The principle has been followed by the courts in several cases. So in my example, if you take this example, the moment court orders retailer to pay amount to customer, retailer is having two options. That means, indemnity holder. I'll talk about indemnity holder. So indemnity holder is having two options. Option one, paying amount to the customer and going to indemnifier for collecting the money. First option, pay money and collect from indemnifier. Second option, indemnifier come and directly pay to the customer. You just directly pay to the customer. Me paying to customer and again getting amount from you. Why? So you directly pay amount to the customer. So in second option, who is directly liable to Anand? Manufacturer. That means indemnifier. Once again, I'm telling you, indemnifier liability gets commenced when indemnity holder loss becomes absolute. When he will make payments, sir, it depends upon indemnity holder choice. Indemnity holder first he may pay the amount and later he may recover from indemnifier, or he may demand indemnifier to pay amount directly to the customer. So these two options are available. So according to that, first situation, indemnity holder will pay and collect. Second situation, indemnifier straight away he is liable to the third party. Understood? So just take the example. A promises to compensate X for any loss that he may suffer by filing a suit against Y. So legal proceedings, simply legal proceedings. A promise to compensate X. That means A is the indemnifier and X is the indemnity holder. For any loss he may suffer by filing a suit against Y. The court orders X to pay Y damages of 15,000. As the loss has become certain, X may claim the amount of loss from A and pass it to Y, or else Y can directly claim from X. Yes or no? Sorry, Y can directly claim amount from A, because A stands in the position of indemnifier, X is the position of X is in the position of indemnity holder. Now X may pay amount to Y and X may collect amount from A, or X may order A directly pay to Y. Understood? So that means A, he may make payment to either X, or he may make payment directly to Y. Similarly, read that second example which I left. You'll get the clarity. So actually this example should be posted after that question, but for the time being, we gave example here itself. Now see, A may contract to indemnify B against the consequences of any proceedings which C may take against B. So here A promised B. So don't worry, whatever action C is taking on you, because of that, whatever amount you suffer, whatever loss you suffer, I'll compensate you. Okay. And in respect of a sum of 5,000 advanced by C to B, in consequence, when B, who is called upon to pay the sum of money to C, fails to do so, then C would be able to recover the amount from A as provided in section 124. See, if you observe this example, I'm changing the color of the pen. See, there is a contract of indemnity between A and B. A stands in the position of indemnifier, B stands in the position of indemnity holder, and C is some third party. So here the promise is to save B for the loss caused because of C's conduct. Court ordered B to pay amount to C. Now indemnity holder loss becomes certain. Indemnity holder loss becomes certain. Now here B has to pay amount to C. Later B can recover that amount from A. Or else B may order A directly to pay amount to C. B may order A directly to pay amount to C. So that means if B fails to pay the amount, then C can directly claim amount from A. So this is a contract of indemnity, and here there is a contract of indemnity between A and B. Indemnifier is liable. When he is liable? When last indemnity holder becomes absolute. To whom he is liable? Obviously to the indemnity holder. But if indemnity holder asks indemnifier to pay amount directly, because to compensate the loss or to make good the loss, right? I'm going to suffer the loss, so please make good the loss. So before I incur, rescue me, protect me, save me. So accordingly, C can recover amount from A. A is directly liable to C. So with this, my dear students, contract of indemnity I completed. So here only two points we discussed thoroughly. One is definition of indemnity, and the second one is rights of indemnity holder. Tell me fast, my dear students, what are the rights available to the indemnity holder? The right to recover damages ordered by the court, right to recover costs. Last one, right to recover any sums paid under compromise. But indemnity holder will get these rights only if he act according to the instructions of indemnifier. If there is no instruction, then he should act as a man of ordinary prudent. Everyone, is it clear, ma? Fine. So with this indemnity contract completed, in the next lecture I'm going to start guarantee contract. So take a small break and watch next lecture immediately. Until then, take care. Bye bye.